Thank you for joining me on the Endless Mountain Network. My name is Derek, and here's some information you will not get from the mainstream media. And I'm going to be talking about the stock market, how I figured out the market was going to crash. We're going to follow that up with the a financial situation, something I've been questioning as far as like a scandal, if you will. And I'm going to follow that up with the new Zeitgeist movie that's coming along with a stock tip at the very end. So that's what's on the agenda for this video. So we'll start off with the stock market. The one thing I've been saying on here, 2 months up, 2 months down, pretty much the way it goes. January 6th was a market top. March 6th is right now looking at a market bottom. So we have an intermediate term bottom, which is looking likely, or highly likely, if you will. And I say intermediate term, meaning it's not the bottom. When you look at a longer term time frame of something like SPY, which is the S&P 500, and I'll bring that chart up right now, term time frame. And there is no reason to see a bottom here. And yes, we may rally for a few more weeks, but these lows that we've had are going to be broke. It's not a matter of if, it's only a matter of when these levels get taken out. So these rallies, if you were gambling, you got 401ks, my personal guess would be to take them out next month sometime. That would be my guess. Sometime next month, take that money out. You can do it now, there's nothing wrong with that. But I think you may gain a little bit more if you wait for a month because we have an intermediate term rally going on. So the market's rallying. We've seen the Dow Jones gain like 10% now in a week. Congratulations. However, all rallies are guilty until proven innocent. So don't get too excited about this rally. It's a sucker's rally. It's a day trader's rally. Not much more than that. It's going to eventually fail. Now, I also want to talk about something about the financials. XLF is the code for the financials. That's a single yield. You also got SPY, like I showed you before. That's a single year for the S&P 500. Those are the type of funds you would want to play if you were going to be going long on the stock market for a long period of time. But right now we're in a bear market, and this was pretty clear by the spring of 2008, this was going to be it, and there was no reason to be holding those funds based on a technical level. If anything, you'd want to be shorting the stock market. Now, it seems with these short funds, you really got to be alert. You got to buy them low and sell them high, because when they sell off really hard, and I'll tell you why. On July the 15th, SKF, which is a double inverse fund of the financials, was over $200 a share. And that's when the Dow was over 10,000, the financials were in double digits. And now the financials are in single digits, and SKF is 150. So if you would have bought it at that point with the collapse happening, you would have lost. So you really can't be playing those double yields unless you buy them low and sell them high type thing. That's the only way. However, like I say, if SPY was a safe play to go on a single, like if it's going to go up, then a single bear fund would normally be the smart play. Of course, there's a lot more to it because of you never know what's going to happen after the collapse happens. But nonetheless, I want to talk about the single short financials. That's the code SEF compared to the single long financials, which is XLF. And right now, SCF is up 24%. That's the single short since the December 8th highs on the financials. Yet the single long financials, XLF, is down 41%. So that doesn't seem right in my opinion. XLF, of course, November had those big lows. XLF broke those lows on January the 20th this year, meaning they went below it. Yet the short financials didn't break their highs, because November is when they hit a high. They didn't break that until like March the 5th. And since that point, if you were to buy on that time, if you would have bought the financials at the low and you were still holding it right now, you would be down 5.5%. So in contrast, you would think that the short fund would be up about 5-6%, but no, it's down 22%. So to me, that seems a little bit manipulative in some way, if you will. The average day since July 23rd, the XLF trades at is 0.43% loss every day, where the single short SCF only goes up 0.3% a day. so you can see how it's not working together. The SCF closed on Friday at $95.02. However, if you were to take the opposite percentage-wise of what XLF does, starting at July the 22nd, then it should be $108.59 based on my mathematics that I have done. So it's a little bit fishy. However, the code DOG, that is a single short Dow Jones, it is working pretty close to DIA, which is the single long Dow Jones. So not much manipulative there, but it still makes me wonder about the system. I talk about the lies and the scandals that they do, and it wouldn't be surprising if they're doing that again here, because I originally thought they were doing it with the leverage funds. Then I did some math on it, and it made sense to me, although I still know they did. They worked around it anyway, but nonetheless, it does seem as if it's a scandal type thing. Now, how did I know about this collapse? Well, first off, in October of 2007, that's when I first started learning how to read charts, or introduced to charts. November of 2007 is when I heard about the 2012 prophecies in the Mayan calendar. And then January, I experienced a large loss in the stock market, which made me wonder that if it was going to happen as far as a downfall was concerned, with like very little knowledge of the stock market. And then February, I understood the consciousness of the Mayan calendar, and I was introduced to Man of Truth, Peter Schiff, and so many others who have made great videos. And then I heard about Webbot. They said the market was going to crash in October of 2008. I did some spirit channeling, if you will, and the exact same information came to me, and I was exactly right on that. There was a nice crash in October of 2008. So that's how I figured this out, and what can I say? It's part of the system. The system's got to go down, which is why the new Zeitgeist movie come out. And in the more info over there is a link to the Zeitgeist Movement. It is part 3. Very, very good movie. It talks a bit more on the monetary system. It talks more on the Venus Project, which is really big. I haven't completely watched it yet, and I will be doing another documentary, another video about that Zeitgeist movie. I'm watching it for the first time now. I'm almost done the first movie now. I'm going to rewatch it again later this weekend or early next week, and then take notes, and then come on here and do a video about that about the Zeitgeist. So that is an idea as something to do, and like I say, I highly recommend the Zeitgeist movie. Let me just move on. Anything else on here? Nope, I've already talked about everything on my notes. So now my stock pick. It's what I would do as a stock recommendation. First off, let me remind you that the stock market is nothing more than a casino game, and it's all about trying to use your predicting skills and which way it is going. So my prediction is this: what I want to see happen with the stock market, I want to see the market lose about 4 or 5% of its values, and then when it does, we see it start to bottom. Once it breaks a level of resistance, then the play would be to go long on the stock market. There's single, double, and triple yield funds, and don't hold them for more than a few weeks, and then get out when you got the profits. So your expected exit point would be sometime in April, and your entry point would be sometime next week, as you would be playing on this suckers rally, because I wouldn't be surprised to see the Dow Jones get back to about 8,000, which would be probably the area in which that I would sell the long positions on this play. You can check on my information page on my channel as my long-term trading, the Dow and the gold. Right now, if you play the Dow Jones or the S&P, like I have been suggesting on there, your S&P or Dow Jones position is now guaranteed to at least break even if the markets just decide to crash on Monday. And if they keep going up, you're guaranteed to have profits at this point, because the short position came at around 6,775, I think, on my page. So that's a prediction and recommendation. However, like I say, the market always doesn't do what you want to do. That's pretty much almost guaranteed, and you got to be ready. So as far as if you play the long position, then remember to have a stop loss at a decent level. So you would predict some lows. Let me just show you on a piece of paper what I mean. Okay, so what we'll do is, this is pretty much how the stock market's been going up lately. Like I say, you want to see it pull back a little bit. So there's a little bit of a pullback, and you can see here how it would start to be rallying. So you put your stop loss right around here somewhere, and as the markets keep going up, you keep increasing the stop loss higher and higher and higher until you either think the market is up way too much and you sell, or your stop loss gets hit, and then you just take your profits at that point. That is how I would recommend playing this. This way, if you do lose, your losses are limited. You don't lose as much. If you play a single yield, you will have less risk for less reward. Double yield, the risks are double, rewards are double. Triple yield, the risks are triple and the rewards are triple. If you have any questions, let me know. Thank you for watching, and have yourself a magnificent day, everyone. Bye-bye.